watching Business Incorporated live on Channels Television. I'm Ladi Williams. Coming up on the program, World Bank tells Nigerian government to reduce its borrowing from the country's central bank. And hackers attack Kenya's internet and mobile payment platforms. Gold prices head for the biggest weekly decline on strong U.S. economic data. Hello, welcome to the program. Let's kick off now with the markets. Starting on the African continent there, we see the NGX at intraday right now 0.47% down. That's what we're seeing, but still holding that 65K level by thread now, 174 points there. South Africa's GSE index, 78,241, marginally down at intraday. Let's look at other markets we track. We'll see the EGX30, that's closed today, but it did close negative yesterday, down 0.33%. And we see the Kenya Stock Exchange there, that closed positive yesterday, trying to get back above that 110-point level. Let's get more analysis now from what's happening live on the Nigerian Exchange Limited. We have Joshua Joseph, equity trader at CSL Securities, joining me via Zoom. Great to have you on the show.
Thank you, Williams. Good afternoon.
Good afternoon, Joshua. So looking at the market right now, it is down. Is it good old profit taking we're seeing today?
Yes, so we've been seeing the sell pressures persisting in the market for quite a while, since Tuesday. This is on the back of earnings releases coming below expectation, and which has really been affecting the market for a while, and investor sentiment has remained on the bearish side.
Right, and definitely looks like investors are not impressed with some of those results we're seeing. But are there any results so far that are quite impressive that, beat expectations?
Okay, putting names, the ones we've seen that beat expectation is just the likes of Transcorp, the Transcorporation. We saw the numbers came in impressively, and also Unilever. We saw Unilever numbers came in. It was a very good one, continuing with its peers and looking at those in the sector, recognizing losses, heavy losses. We saw Cadbury recognizing heavy losses on the back of the Naira devaluations. We also saw Nigerian Breweries number coming in today, recognizing losses too. And Airtel also numbers came in this yesterday, which also lost. And Seplat also, we saw decline in Seplat profits. They still came back in profit, and we also saw decline numbers. So these are not really putting a positive end on investor sentiment, and with some massive sell down in those names. As I speak to you, MB is currently 10% down. We saw a massive sell-off today as a result of the numbers that came in.
And looking at the market right now, is it for sure going to be a bearish close today?
As it stands, the market is down by 0.69%. Barring any positive catalyst, we do expect the market to close negative today. However, looking at what it is on a week-on-week basis, the market is still up by 5 basis points marginally as it stands.
And earlier this week, we did get the MPC rate decision. It was a 25 basis point hike. Was that in line with your expectation? And looking at banking stocks right now, how has that, shaped banking stocks on the NGX so far?
Okay, so the rate hike, it's mostly in line with our expectation. The expectation was at worst a hold and a maximum of 50 basis points hike, and it's coming in at 25 basis points. It still works in line with the view that there's going to be a hike on the MPR rate. What we saw, the reaction that occurred basically is that we saw a bit of sell down in banking names. this is what we saw after the hike. Though the sentiment is that this will recover once their number starts coming, and we do expect the tier one banks to start releasing their numbers, and we expect impressive numbers like we saw in FBNH, and we expect others to also play out. But mostly, investors have majorly priced in the expectation of rate hike in the market for a while.
Looking at other central bankers now, we're seeing the U.S. was 25 basis points. The ECB also did 25 basis points, and Nigeria did 25 basis points. But if you look at most of these other economies, we're seeing inflation starting to slow down in those economies. But here's it's a different story. Looking at inflation at 22.79%. Should we really be doing 25 basis points in your opinion?
Okay, like I mentioned earlier on, my opinion is that 25 basis points is a good one. We were expecting a maximum hike of 50 basis points, which we saw, according to the statements released by the stated by the acting governor, it's more like the members, the highest votes was 50 basis points hike, which is in line with our expectation. According to him, it said what we do see is that the continuous hike in the MPR has been having impact on the inflation numbers, though it's way below what the hike has been. What we should understand is that the way Nigerian market inflation works in a different way, and it's basically cost-driven. And there are other factors contributing to the spike in inflation numbers. We've seen the month-to-month numbers declining at a point in time during when those hike was coming in. Then afterwards, due to other policies affecting purchasing powers and cost of production, this was what we saw related to the hike we've been seeing in inflation numbers. And we believe with time that the policies by the CBN should be able to tame inflation. But we are not seeing any expectation that inflation will decline anytime soon.
All right, let's look into your crystal ball together now. Going into next week, what are you seeing on the NGX, and are we expecting any market-moving data next week?
Yes, so we expect other, like I mentioned earlier, on tier one banks, we expect, and other names, we expect their numbers to come in, basically, and we expect that will affect investor sentiment to a positive end. Over the weekend, we do believe that these numbers will have been well digested, and you would see other things coming into the market. One thing that's also contributed to the sell pressure in the equities market is what happens in the fixed income end, which we've been seeing attention-based cues towards after the auction, the NTB auction coming with an attractive yield. So these are factors that we've been seeing affecting the market. But going into the next week, we expect renewed interest in these names as the fundamental stock have remained at an attractive end for now.
Right. I thought you were going to say we expect renewed hope, but yeah, renewed interest. Thank you so much, Joshua Joseph, equity sales trader, CSL Securities. Thank you.
Thank you very much, Williams. Thanks for having me.
All right, now let's take a look at what's happening in the Middle East now. We see the Abu Dhabi and Dubai indexes. That's up by 0.11 and 0.20% each at intraday. Those are the ones trading at intraday in the Middle East with the markets we track. Other parts, we see Saudi Arabia, Qatari index. Flip side, the Qatari index did really well to close yesterday, 1.20%. So a lot of bullish movement there with stocks trading there. The Saudi index, though, closed down 0.49%, about 0.5% yesterday. Let's head on to Europe now. See the European Central Bank has raised its key interest rate by a 0.25 percentage point, and that was yesterday. And it's the ECB's 9th rate hike since July last year. Joining me now is Chiponda Chimbelu right there in Berlin. Great to have you, Chip. So will the ECB keep raising rates?
Well, ECB President Christine Lagarde left everyone wondering as to whether there will be another rate hike in September at the press conference on Thursday. She said that the European Central Bank will determine whether it hikes or pauses its key interest rate in September, depending on the data. It seems that ECB policymakers are worried that their efforts to curb inflation in the Eurozone may be hurting economic activity. Lagarde said that the economic situation in the Eurozone had deteriorated due to weaker domestic demand. And the numbers that came in this week also showed that the private sector economy contracted more than expected. Expectations appear to be pointing to a downturn for the euro area, and manufacturing activity in particular is struggling, especially in Europe's industrial powerhouse, Germany. Now, the only glimmer of hope that perhaps not all is gloom comes from France today. The Eurozone's second biggest economy grew more than expected in the second quarter. It expanded 0.5%. But despite that positive surprise amid the recession fears here in the Eurozone, the ECB may still pose rate hikes if the Eurozone data continues to worsen in the coming weeks.
Right, I guess that's a forward guidance there. But how do signals from Europe compare to those from the U.S. Fed?
Well, the latest ECB's rate hike on Thursday, came a day after the U.S. Fed raised its own interest rates to the highest level in more than 2 decades. And there was some ambivalence on both sides of the pond as to whether the central banks would pause or raise rates the next time. The difference, though, is the outlooks. The ECB officials are more concerned about the effects that higher borrowing rates are potentially having on economic activity in the Eurozone. While the short-term outlook for the Eurozone has worsened, growth figures for the US this week exceeded economist expectations. And now what we are seeing is that the euro is losing some of the gains it has made in recent weeks against the US dollar. It is now down nearly 2% from an 18-month peak against the greenback earlier this month. So while both the ECB and the US Fed were ambivalent about what to do next, a rate hike in the Eurozone looks highly unlikely if the data here continues to be as disappointing as it has been. And ECB policymakers will be keeping a close eye on inflation figures, which will be coming in next week.
Right, we'll keep tracking that here too. But what can we expect from markets today?
Well, European shares are expected to trade lower today. Investors are digesting a decision by the Bank of Japan that left the Japanese yen volatile. Data coming in today includes Spain's GDP and EU consumer confidence. And on the news agenda, markets will be watching for developments at the Russia-Africa summit in St. Petersburg. And of course, Italian Prime Minister Giorgia Meloni is meeting with US President Joe Biden. Now, the Italian PM is expected to discuss her country's ties with China with the US leader. So investors will be watching for any signals about the West's future ties with China.
All right, Chip, so much to look out for there. Thanks so much. That was Chiponda Chimbelu right there in Berlin. Thank you. All right, now let's head on to other markets. Now let's take a look at what's happening in Asia. We see Hong Kong stocks plunged to its lowest level since April 2009, leading losses in the Asia Pacific as Bank of Japan left its benchmark interest rate unchanged. Hang Seng Index in Hong Kong lost about 4% trade there. Nikkei down 0.40% to close. The Kospi there, 2,608 points for the all-share index. That closed 0.17% up. And the HSI index, that's up a big there, 1.41%. We see the Shanghai Composite, 1.84% up. And the ASX 200 in Australia, that's down about 0.70%. Let's flip over to the U.S. now. We'll see stock futures rose early today as Wall Street awaited new inflation data due today. So futures started the Dow Jones Industrial Average in the green, 0.24%. 35,000 for the all-share index. S&P 500, 0.43% up. When you see the tech-heavy NASDAQ looking quite bullish there for the futures trade at 15,695. up 0.80%. So those are how markets are looking in the US and Asia and right here in Africa. So we'll take a break now. When we come back, we'll take a look at what's happening in Kenya. That's the next conversation. Just stay with us. Welcome back. Global ratings agency Fitch has revised Kenya's economic outlook to negative, affirmed its long-term issuer default rating at B due to heightened external financing challenges amid high funding demands, weakening external reserves, among other issues. Joining me now is Matt Kindiger, practice leader, Sub-Saharan Africa Front Review, joining me now to provide more insight. Great to have you, Matt.
Today.
So do you expect the government to be able to stabilize public finances despite this recent downgrade from Fitch?
Yeah, so Fitch's downgrade is not really surprising. Certainly the government has faced quite significant pressures with its public finances, and they're not in a great state at the moment. But when we look to 2024 in particular, we would expect the government to be able to stabilize its finances eventually. And what this means, or what this looks like ultimately, is we do expect it to avoid it facing debt distress, and therefore we do expect Kenya to avoid a default. And this is because there's been a number of measures being taken by the government at the moment to prevent this from happening. So firstly, we have seen quite significant funding being secured from the World Bank and the IMF, about $2 billion in total over the last couple of months. Also, the government has introduced its quite controversial but arguably fiscally necessary finance bill this year, which does raise taxes and cut spending. So there are a number of measures which are being taken to ensure that Kenya doesn't face debt distress next year and that it can stabilize and consolidate its public finances. But it will be quite a painful period for many Kenyan businesses and consumers and households at the moment. So certainly a bit of a tough time as a result of these measures.
Right, definitely a tough time right there in Kenya. But how long do you expect the cost of living protests in Kenya to last for?
Yeah, certainly. So unfortunately, we would expect these cost of living challenges to continue for the foreseeable future. In other words, probably until the end of this year, but we probably would expect them to be rather cyclical. So what we have seen is the government deciding to clamp down on these protests using the police. However, we don't think the fundamental drivers of the cost of living protests will disappear. And this is because the cost of living probably will get a bit worse before it gets better in Kenya. Mr. Ruto's government is pretty determined to push through with fiscal reforms, raising taxes, cutting spending. But also we are expecting inflation to accelerate in Kenya over the coming months. And this is because the shilling has lost quite a lot of value against the dollar, and it will continue to do so. At the same time, Mr. Odinga, who's really the champion of the opposition protests, cost of living protests, is also quite determined to make a point and raise the issue of cost of living. So certainly we do expect some commercially disruptive cost of living protests and general protests to continue for probably at least the next few months in Kenya.
Right, and what does this mean for the country's economic growth outlook?
So Kenya's economy actually beat expectations to grow above 5% in the first quarter of this year. So it grew above 5% year on year in Q1. But we are expecting it to slow, and it might slow quite dramatically when Q2 data comes out, and especially Q3 and Q4 for this year. And this is because, we are expecting the new Finance Act to really raise taxes, cut spending, and that has been a big, public finances or government spending has been a big driver of growth in the past. Consumer spending is also going to come under a lot of pressure. And there actually has been, at least anecdotally, a reduction in tourist arrivals as a result of the protests in the country in Kenya. So certainly also interest rates are also rising in the country, and this does suppress credit growth to an extent. So we're forecasting growth of about 3.5% this year, which is not terrible, but it's actually not great by Kenya's recent historical standards. 2024, however, is likely to be a much better year for Kenya. So we're forecasting growth of close to 5%. And this is because we do expect investors to become a bit more confident in the government's ability to stabilize public finances. There's likely to be a bit of a tourism rebound. The shilling will probably stabilize next year as well, and this will again support consumer and investor sentiment. So our view really is a bit of a slowdown over the next couple of months and into the rest of 2023, but an improvement likely in 2024.
Right, I guess all hope now just signals to 2024 at this point. Quite a tough start for the Ruto government, definitely. But thank you so much. Always great having your perspective, Matt Kindiga, Practice Leader, Sub-Saharan Africa Front of You. Thank you.
Thanks very much.
All right, now let's take a look at some other stories now. See, the major cyber attack that caused an outage of more than 5,000 public services in Kenya for more than 48 hours of disabling internet-based and mobile payment platforms. The attack hit a critical section of the country's financial system, with M-Pesa mobile service product is fast turning into an artery for the circulation of money in Kenya's economy. Also disruption cut across the whole economy, from payment of bus fares by those going home after work to visa processing for those who want to leave the country. And in Nigeria, we see the World Bank Group has asked the federal government to take measures to reduce its borrowing from the central bank as part of an effort to address inflationary pressures on the economy. The recommendation was made by the International Finance Institution's lead economist for Nigeria, Alex Sinet, in an economic review session of the Lagos Business School, commending the Nigerian government for recent economic reforms. Senate suggested implementing several strategies, such as reducing government borrowing from the central bank, reducing subsidies lending from the CBN to medium and large firms. Explained that these measures are aimed at curbing the increase in the money supply and, in turn, reducing inflation. And as Nigerians grapple with rising cost of living, experts in blockchain technology are recommending exploring tech to distribute palliatives to support vulnerable in society. One of such suggestions from Adedeji Awonibi, co-founder Convexity. Take a listen.
We are going through excruciating pain now. And the least I think any government can do now is to make sure that citizens actually are cushioned, with any necessary thing they can do to make the suffering a bit lesser for them. And I think the great thing within this whole thing is the lack of transparency. Within the former way aids have been distributed to citizens, so-called, maybe, because there's a lot of, argument around whether that was done or not. And we're just thinking that it's time that government come very clean. It's a time for it to build that resilience and trust within its citizenry, and technology can bridge this gap, in our view. Especially the blockchain technology. Of course, it's touted as a very transparent solution that aids like that can be distributed to all citizens, and everyone can attest to the fact that the vulnerable actually got it. Because a lot of people are asking in your neighborhood, who actually got it? I learned the vulnerable, they share money to the vulnerable, who got it? And nobody will actually come to do that. And I think with technology, the government can come very clean, and that is where, for example, we decided we want to bridge this gap by building a transparent aid distribution solution, and that is being supported by UNICEF to say this is transformative, and we think our government should look in this direction.
Now let's get a quick check. Gold prices now holding near a 2-week low today after strong U.S. economic data drove the dollar and bond yields to a high interest rate environment that dragged the non-interest-bearing metal towards its biggest weekly decline in 5. Spot gold is up 0.3%, $1,951 per ounce. And after hitting its lowest level since July 12th and ending 1.4% lower in the previous session. At the same time, U.S. gold futures rose 0.2% to $1,950 per ounce. The bullion has declined 0.4% so far in the week, heading for its biggest weekly fall since June 23rd. And a Reuters poll shows that analysts slightly lowered their gold price forecast for this year. And that's Business Incorporated today. That's how your money performed at intraday. And those are the top stories on the African continent. Thank you so much for watching. Don't forget, you can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, click on videos. You can watch all our productions. Thanks for watching. I'm Ladi Williams. Enjoy the weekend.